Governments all over the world are desperate about inflation and they want to do everything they can to break the back of inflation. Today is the day the Fed is going to make an announcement and we're going to understand which way they want to go. Are we going to crash the stock market or are we going to break the back of inflation? We're going to discuss about all that coming up after the intro. What's up guys, this is JC and welcome to the Wealth Engineering channel. I create content to motivate you to make, keep and multiply money by investing in stocks, crypto, real estate and business. And today we're going to talk about the market because hey, there are some serious things happening with the Fed, inflation going up, right? The governments all over the place, all over the world are desperate. They're going to do something about that. But hey, if you like this type of content, make sure you hit the like button, subscribe, and click the bell. Now let's get into it. Federal Reserve likely to signal March interest rate hike this week. At first they said they were going to do 3 rate hikes, 4 rate hikes, and then now it's like, you know what, we might even have to do more than 4 rate hikes. And my prediction is they will have to do 4 more rate hikes. Look at this guys, with inflation hitting 7% in December, well above the Fed target that is 2%. Again, the Fed target 2% and they got 5% more extra. Analysts are expecting US policymakers to adopt a more hawkish approach in the coming months. Hawkish, like a hawk. They want to attack inflation like a hawk, right? Very aggressively. Now that shows you there is a deeper problem going on and they need to tackle it. Now first, let me break it down to you. Since 2019, we haven't had any rate hike. The consequence of that is an increase in value in real estate and also an increase in value in the stock market. So basically, a large part of the entire world economy resides between these two markets, real estate and the stock market. Now here's the issue. The number one problem that politicians are dealing with, especially in the US, for example, is re-election. They love being re-elected, right? And one of the problems, one of the things that can guarantee that you will never be re-elected is inflation, right? Let me give you an example. Look at this right here. Dollar Tree raised price point to $1.25 citing inflation. This was happening last year in November. Since then, it only got worse to the point where now Biden's approval rating is hitting a new low in the polls. Now there is many reasons why this is happening, but I find it very interesting that one of these reasons was inflation is causing economic concern nationwide, reaching the highest level in decades, right? So this is a problem right here. And again, nothing frustrates the voters more when, hey, their salaries are not increasing, but the living expenses, we're talking about their rent, we're talking about their food, we're talking about their cell phone bills, any reparation they want to do in their home, everything, gas, everything is going up, and that's going to frustrate as many people as possible. So situations like that really don't encourage the voters. Therefore, President Biden is going to really force the Fed to do something about inflation, right? Not as many people is investing in the stock market. Maybe some of them might have their 401k, but hey, the inflation price rising affect everyone. So they're definitely going to prioritize that. And one of the ways they're going to do that is by rate hikes aggressively, but that's also going to create a crash on other sectors, especially on the stock market. But hey, some governments are desperate. Some governments are going to extreme measures when it comes to what do they do to take care of inflation. Check this out, guys. This is an article in Montreal, Canada, Quebec. Excuse the French, but to summarize it very quickly, it's saying that, hey, $200 checks are coming to help fight inflation, right? They're starting this Monday. We're talking about 2 days ago. Statistics Canada are saying that, hey, the price index consumption is rising from 4.8% to 5.1% in the province, right? And that was the numbers are rising everywhere and they want to do something about that. But honestly, guys, I feel like this is kind of like a prototype for universal basic income. They're giving more checks. If you're single, you get more money. Check this out. They're saying that, hey, people that have low income, meaning income lower than 50,000, they get more checks. right? So this is again more money that are being given to people, which means they're printing more money, which in terms will increase the inflation rate. They just don't understand how economy works, right? Which is why you need to understand how it works. You need to educate yourself financially. The best investment you can make is to invest in your financial education. And this is exactly why I created the Technical Investor course, guys, so that you can understand everything you need to know before you make your first investment. If you have an investment in less than 3 years, you want to make sure you check this course out. It's really going to frame your mindsets on how to think about investing for long terms, understand the forces that can affect your wealth, forces like government intervention in the economy, forces like the inflation, price rising. You can join the YouTube channel if you want to support, or join the Patreon if you want to dive deeper in cryptocurrencies and strategize on how to make the best out of this market. Lastly, guys, news like this, whether it's the Fed raising hikes, whether it's the government trying to motivate them to cut inflation, whether it's anything like that, or a government doing extreme measures, the beta testing the universal basic income, well, things like this will create some instability on the market. You're going to see stock market really go down. They might have volatility is going up, the fear index is going to go lower on the fear side. So things like this will really have your price fluctuating. So if your portfolio, you have your assets stock on a if you have your assets on a stock right now, you might have to brace for impact. Winter is here, and it is here to stay, because this is not the first time we're going to hit inflation this year. It's going to be a constant theme that we're going to have to get used to. So naturally, you would have to think of ways to counter that, right? And whether it's investing in gold directly or in a gold mining company, these are things that, I'm not a financial advisor, this is not financial advice, but for educational purpose only, these are things you should at least consider and go search, right? It's not necessarily only gold, it could be copper, it could be silver as well, but usually commodities, they do very well when unstable times are coming up forward. With inflation rising, with volatility, people normally gravitate and sell their risky assets at this moment, which could be stocks and sometimes cryptocurrencies, and move it to other markets that is more stable and predictable, kind of like that correlates on an opposite way, as opposed to if the stock is going down, you want to have something that's go up as a way to still make more money, right? Still protect your wealth, still maintain your purchase power. So again, I'm not saying I personally buy gold or silver. Maybe at the end of the year I'll probably be doing some silver, but right now I'm actually leveraging away from the stock and crypto market, slowly investing in other type of business, investing in real estate, things that I see booming that are undervalued right now. That's what I'm doing. But hey, I would definitely say for educational purpose only that you should at least consider different markets where you want to allocate some of your wealth, especially when we know we're going to have more and more rate hikes, which will create possibly a market crash, a stock market crash. And we're seeing how that may look already. With the last 2 weeks, the market has not been very good. With that said, guys, we'll talk on the next one.